This past year was a year of significant change for the district's taxes. The City Council was confronted with a substantial budget deficit, and it acted to close about half that deficit with tax changes of one kind or another. And they are, in the world of state and local taxes, pretty significant. And so much of my talk is simply going to be to run through those and tell you what they were, what they are. By far, from the point of view of business, the most important tax change is that the district has adopted combined reporting effective for the 2011 tax year. The district has been, in the past and until now, an easy target for tax avoidance through separate entity tax reporting. So this legislation has been enacted for the 2011 year. Its legislation is largely based on the Multi-State Tax Commission's model statute as adopted in West Virginia, with some changes. And it was the subject of some last-minute taxpayer-friendly changes right at the end. Other changes. Another significant change that affects the business community is the district, which had to be one of the very last places using evenly weighted three-factor formula for apportionment purposes. District has now gone to a double-weighted sales apportionment factor. That too is effective for the year that has just passed, tax year 2011. So in apportioning income to the district, we now use a double-weighted sales factor. This is another significant change for the great number of taxpayers who file no tax due returns, both unincorporated franchise taxes and franchise taxes. And the minimum tax, which has been $100 for many years, has been increased to $250 unless your adjusted gross income is $1 million, in which event the minimum tax is increased to $1,000. There are some individual changes as well, which of course affect small businesses. After a considerable amount of public wrangling, the City Council has adopted a super rate of 8.95% for taxpayers with DC taxable income of $350,000. That does not begin to, that applies in the current beginning for 12. Applies to states and trusts as well. And also, with considerable public input, District of Columbia, which was the last jurisdiction in the country which exempted other states, interest on other states' municipal bonds, has repealed that exemption for bonds acquired after December 31st, 2011. And that will include bonds held indirectly through mutual funds. Does not include bonds issued by the Washington Metropolitan Airport Authority. We have a notice out on this one, our notice 2011-6, it's on our website. We've had a fair number of questions on this, and in particular dealing with the mutual fund questions. Obviously, mutual funds will have to tell their holders how much of their out-of-state bond income came from bonds which the funds acquired after January 1st of this year. That's, of course, a next year problem. So lead time. We haven't heard that they can't do this, so we're hopeful that they'll be able to. We have reenacted limitation on itemized deductions. It's a little different one than the federal one, which went out of existence in 2010. The new limitation applies to itemized deductions for DC taxable income of $200,000 or more. And itemized deductions are to be reduced by 5% of the amount over $200,000. Does not include medical expenses, investment interest, or casualty losses, and it is effective for the current tax year. That'll be on this year's returns. Another new requirement is the district has joined a number of states which now require withholding on retirement account distributions. Essentially any retirement distribution to the extent that there's a federal withholding requirement. It is effective beginning January 1st of this year. Unfortunately, clarifying legislation didn't get enacted by the council and signed by the mayor until December 22nd. So a little short notice, but we did issue a notice, and of course we're telling providers to do the best they can. We recognize that in some cases they will not be able to get their systems changed for some time. Obviously the object of this change is to well, first to accelerate revenue, but also to prevent the revenue loss that is frequently entailed, particularly with lump sum distributions, where taxpayers receive the distributions and then proceed to spend all the money before the taxes are paid. Interestingly, and by far the largest component of the tax package is a requirement effective January 1st of this year for employers to remove the standard deduction from the withholding calculation. It's for employees. So as you're calculating employees' withholding on their weekly, bi-weekly, or monthly paycheck, you now are to take out the standard deduction from the calculation. The effect of that is, of course, to increase withholding taxes from any district employee by the tax on $4,000, which for a taxpayer in the $40,000 range, that's about a $340 tax increase. It's a withholding increase. It's, of course, not a tax increase because you get it all back when you file your return for the following year. We have switched our sales tax on cigarettes, which was captured at the cash register, subject to a 6% sales tax to the same extent as most other property in the district. Effective October 1st, it has been exempted from the sales tax, and we have shifted the sales tax to the wholesale level in the form of an additional 36 cents on our stamp tax. Our stamp tax was $2.50 a pack. Beginning October 1st, it's become $2.86, and cigarettes are now exempt at the cash register. The purpose of this is to obviously eliminate the tax leakage on that occurs at the retail level. Sales tax has been extended to security services effective October the 1st. Security services, armored car, private detective, security services like burglar alarms, for instance. Our sales tax on sales of alcohol for off-premises consumption, which used to be 9%, has changed to 10% effective July 1st. There was another one the council enacted with about 6 days' notice. We've got our notice out on June 29th, so I suspect we didn't get it all right away. Council has also increased the sales tax on charges for parking and storage of vehicles to 18% effective October the 1st. And our existing general 6% rate was actually temporary. It had been 5 3/4 for many years. It was enacted as a temporary provision for 2 years. It has now been made permanent, which probably didn't surprise anybody. Those are the new tax law changes that I wanted to talk about. I have some contact information for those of you who are practitioners and need to get a hold of us. And with that, thank you very much for your attention.